Hello and welcome back to another video, and today I'm going to be teaching you guys the idea of intraday swing trading with the help of Imbalance. Okay, so intraday swing trading is basically you have your daily candle, right? And the goal is to enter at the very low of the day and exit at the high. Okay, so this is bullish day, and price will come down and you enter at the low, exit at the high. That's the ideal perfect scenario. Doesn't always happen. Don't have such high expectations, but yeah, that's the goal. So if we look at this price and break it down into a lower time frame, say the 15-minute or hour or whatever, the price will do its thing, and then price swings low, and then it will come up, pushing up, giving a high of the day, and then it will come down and close wherever. But by this point, it doesn't matter. So this point we don't care about because we're not trading this point. But we do care about this move because this is the move we want to capitalize on. Okay, so this is the bulk move of the day, the one that we can predict, the one that we can try and make some money off of. Doesn't mean it's the biggest move of the day, but it's the one we want to try and target, let's say. Okay, so yes, bullish day, price will do its thing, push down, then push up, and then do its thing again, or like whatever. So if we were to look at this on the actual charts, there's actually a secret bit of information that you guys need to know, is that the daily candles don't actually represent each new day when it comes to Forex, okay? Each new day actually happens at New York 12 a.m., right? So to be able to add this to your charts, you want to head over to your indicators option, and you will need to add the ICT kill zones and only use the London kill zone. You need to add the imbalance indicator and New York midnight, okay? This is the start of a new day each day, okay? This will tell you when it is. And it's just this blue line here, pretty simple indicator, but yeah, that's the idea. So this specific day was a bearish day, like with the Bulkland move that we're trying to capitalize on. So we had this move, price opens at the 12 a.m. New York time, okay? It does its thing, and then it pushes up and hits 50% of this imbalance over here, right? So we mark up the 50% zone. Place a sell order, stop loss at the high, and we target the low. Okay, see these equal lows? Big target, okay? With the coupled imbalance right here, you know this price, like this area wants to get tagged out. So this is a trade we would have done for that day. Yeah, it came up a bit higher, but it doesn't matter because it didn't stop us out. Just left it running for the day. And the bulk of the move, like I said earlier, was right here. You see? So that was the bulk of the move. From here onwards, we don't care. We don't care about what happens for the rest of the day. So yeah, that's a winning day, 2.39. Tell you what, I'm going to tally this up. 2.39 on trade. And that's on the first day. And the next day comes along. And what do we see? We look for our imbalance areas. So our imbalance area is right here. But it looks like we don't get tagged in on this day, which is fine. Yeah, don't get tagged in. We move on. No trade this day. So next day comes along. And we zoom out, try to find some imbalance for this day. And price. Yep, so we've got this level right here. Horizontal ray, just so I can see where price is going. Yep, so you got this imbalance area right here, but the low is all the way down here. So we would draw it out. Sorry if this is a bit messy. Right, so although price did come in, we could have taken this trade. But realistically, with a stop loss that big, I wouldn't. 40 pip stop loss isn't my cup of tea, so I'm not going to take that trade. So I'm being realistic here, guys, giving you a good perspective of how I trade the markets. So next day comes along. What do we see? Price opens at 12 AM, pushes down, and then pushes back up. We do have an imbalance right here. That price come into dead on the London kill zone start. Okay, so set stop loss at the low. Like so. What do we target? We would have targeted either the next high, which was here, or this imbalance. But realistically speaking, it would have been the high. So 1.13 our trade. Is that right? Yeah, 1.33. So that's 1, 2, 3, 4, fourth day. Not even hit a week, guys, and we've already made about almost 4R. Now, because, guys, we do not have a daily bias for any of these days, you will also have another position for sell right here where the imbalance is. And you can enter a sell position like so, with stop loss at this high, 5-minute high, and you would target this low that's just created here. So this day, you'd make another 2.5R. So another 2.51R. And now you're definitely done for the day. You've made a lot. Move on. So next day comes around, and what do we see? Imbalance like so. The open, so the actual true daily open, price pushes up. There's also a huge amount of imbalance right here, and I would have taken both of these trades. So I would have entered a sell right here, stop loss at this high, take profit at the low, and I would have lost. So minus 1%, 1R. And this one is a very unfortunate day. But yes, I would have tried to enter at 50% again. Stop loss at the high, and I don't get triggered. So therefore, I don't even take that trade. So just a losing day on that one, although it looked perfect. But hey, these things happen. You move on, okay? So let's just try and find one more example. Where's price going right here? That's that big swing again, so I wouldn't be taking that. Okay guys, there's another example right here. So got some imbalance. Price has come up into the imbalance in the London kill zone. You enter at 50%. Stop loss at the high. Take profit at the low. 2.43 trade. Okay? And then from this day, bang, another imbalance right here. Enter again. Stop loss at the low. Take profit at the high. Another 2.47 trade. Okay, guys? There wasn't a whole load of opportunities around here for a good few days. So 1, 2, 3. I know I drew this imbalance out, but there's imbalance in the whole leg, so I wouldn't have entered that trade. So yeah, for 3 days, didn't get any opportunities, but for the rest of the days, you know, I did. You can see them all right here. So I took 1, 2, 3, 4, 5, and 6. 6 trades out of. So I took 6 trades. 1, 2, so 1, 2, 3, 4, 5, 6, 7, 8, 9. Out of 9 days, 6 trades, 9 days. And what was the R on these ones? I'll tally it up. 2, 4, 3, and 2, 4, 7. Okay, so as you can see, I haven't traded a lot across this 9 days, but the amount of profit I made within the 9 days is, I'll just add it up to real quick. Yeah, so 10%. So 10.13% or R in that case. So as you can see, this strategy does work. You won't have opportunities every single day, but if you learn to build up the patience to not trade every day and not trade every hour, every minute, and only do one pair, then yeah, this can be a very profitable strategy, and it will also build up your mindset when it comes to trading and your psychology, keeping you super patient in the markets. Okay, so yes, it was a quick video today. I hope you found this helpful. Please include it in your trading. It does work. And yeah, hit like and subscribe, and peace.